Greetings everyone, Joseph James here once again with your nightly newsletter brought to theschooloftrade.com. Today was November 24th, 2009, a Tuesday morning. Had another huge day in the live trade room today, guys. Before we talk about those trades we took today, I want to remind you guys about our free resource online. Head to our YouTube page /School of Trade. While you're there, guys, please subscribe to our channel. That way you get all the new videos. And don't forget to rate and comment on this video. Now, right below this video, if you're watching on YouTube right now, is a link to our track record. In the description below this video is a link to our track record. Go ahead and click on that link, and then we'll take you to a page that has our track record, of course, all the live trades called in the room every day. And of course, let's take a look at the totals we had today. 73 ticks, could have easily been above the 95, 96 ticks today. We took that small stop, but of course, how we handled that stop was really what made us money today. We rebounded from it. We made a bunch of great trades afterwards. 73 ticks in the pocket today, $730 on only 4 contracts. That brings our weekly total to $1,360, monthly total to $7,600, and we are now at $516 on average every day on 4 contracts here in the room. We'll keep you guys posted. Of course, the term of the day today is layers of risk. Now, we talked about this term in the room this morning. They're used to describe the many different elements that contribute to the overall risk of a potential trade. You'll hear me say things like the chop zone, slower price action, and the stutter step pattern are too many layers of risk, and we will avoid that trade. So basically, we're going to use our entry rules and a couple other things to identify these layers. We avoid trades with multiple layers of risk, and we want to take the trades that have the fewest, or of course no layers at all. Here are some examples of what these layers of risk will look like. If price is in the chop zone, which is the center of a bracket, right, that's going to be a layer of risk. Slow price action. The time of the day, location of the trade, right? Do we have 6 ticks worth of room? What is the slope of my trigger line? And of course, many more. One of the biggest benefits about using this strategy of layers of risk is it allows our aggressive traders and our conservative traders to trade the same patterns, but to be able to determine the level of risk on each trade, and then they can, of course, make an educated decision based upon that information. So take me, for example. In our room, I am a conservative trader, which means I only take up to 1 layer of risk. I take a little bit fewer trades every day, but there's lower risk on each trade. Now, we also have a couple members in our room each morning that love to be aggressive with their entries. They're aggressive traders. They will, of course, take trades that I won't take because they'll look at the layers of risk, and they'll take up to 2 or more layers. So you may see a high-risk trader in our room take an HR3, a high-risk 3, which would mean 3 of our rules did not line up. Of course, aggressive traders, again, 2 or more layers of risk. You'll see more trades every day, but they'll, of course, will be higher risk on each trade because you're not using all the filters that a more conservative trader would. Layers of risk can be a great tool for you because as a new trader, you want to make sure you're not trading during times of high risk as you learn. Okay, use a conservative approach, less than 1 layer of risk. But as you become a more aggressive trader, you can then, of course, take trades that have additional layers of risk. You'll take more trades more often, a little more risk on each trade, but it will fit your personality. These layers of risk are going to be a key component to your success. So we're going to show you guys tomorrow morning, live in our trade room. Opens up at 7:45 Eastern Time. We'll show you guys how we look for these layers of risk. We'll define for you what we do with them, how we use them. So come out and join us tomorrow morning, 7:45 a.m. Eastern Time. Remember, tomorrow morning, grab a copy of the beginner's course on the way in. And as always, guys, let's take a look at some of the trades we actually took today in the room. 5 trades today total, 73 ticks. When you count them all up here on the crude, our short-term trend is down. Right, short-term trend here was down. We have this low of the day here, right? This dotted blue line here, right? This is your low of the day. Okay, so as the price, of course, as price came down, it broke below the low of the day. It pushed the low of the day here below this key red line here, right? These key levels of support. Again, those red lines are major levels of support and resistance marked on my slower time frame and then placed on my faster time frame automatically. So the red line is there automatically for me. I'm looking then, of course, right, for a break below our swing low here, which is at 56, also the low of the day. Now, that break below that swing low actually never came. Well, it did come, but it didn't come until after we took our first trade here. So we had the low of the day here, right? That was our swing low, and we were waiting to see a break below that swing low for our breaker pattern short. We didn't get that, though, right off the bat. What we did get was a swing high here, and that swing high there at 65, that swing high was then, of course, our entry for a 2-step long. Okay, as you guys know, whenever I'm looking at the low of the day, I'm always in the back of my mind thinking I'm waiting for that 2-step long. Because the low of the day is such an important level of support, we expect that reversal to happen. If we don't see what? What are we looking for? Momentum points down, green pace of a tape, right? Green pace of a tape. Got to see green pace of a tape to make sure that was low of the day is going to be broken. So while we're waiting for that to set up, we saw a break above the most recent swing high. That swing high, of course, right here, right there at 65s. We took the trade long, of course, right? A two-step long, 946, two-step long. The fill is at 67, so a couple ticks above that swing high. Got a full stop there. Okay, so of course, got a full stop out. We do take stops here in the room. First trade was a loss, so never good to see the first trade being a loss, of course. That's okay, though. We were looking for that breaker short, remember? Of course, with that breaker short, that's what's coming next. So we took a small loss in the first trade. Then the second trade, we were still waiting for this break of this 56, this low of the day. So of course we saw the break below 56, and we made all that money back right away. 947, right? Exactly 1 minute after we took that stop. And again, this is what I meant earlier when I said it's how we react to our stops. That's what makes us successful. We stayed focused. We remained calm, collected. We didn't get afraid. Didn't let fear step in. Right? Didn't get greedy. At 53 was our fill for this breaker pattern short. 20 ticks there, guys. We took 4, 8, and then trailed our stop for 4 more ticks. Total of 20 ticks or $200, guys, there on the second trade of the day here on crude. Now we weren't done there yet. Of course, the trend continued here to the downside, and with this downward trend, we broke again below one of these key red lines here, right, guys? Remember, these red lines are always marked automatically for me, courtesy of my indicator package. We see a swing lower at 35. We break below that swing low at 35. This one actually got filled at 35. We took 6 ticks, 8 ticks, and then 5 ticks. Got a good fill there in the first one. Not usually going to get a 6-tick fill. We got a 6-tick fill in the first one this morning. You guys saw 25 ticks total for $250 on this third trade here. So we took a stop first, a winner second, winner third, and you guys can see, guys, we made all that money back and some, and we weren't done there yet, guys. We had 2 more trades to take. Let's keep moving. Our fourth and fifth trades here on crude were also winners. Had a great day, as you guys can see here in the market. Now at this point, short-term trend down, right? Short-term trend was down. We had 2 back-to-back winners here. We broke below these red lines here, right? Break below the red lines, just about 75.98, 75.97. We made our swing low here, 96. Now we had to be concerned because we had the big round number of 76 above us. So this was a higher risk entry. The first one here was higher risk because it was in about 5-6 ticks of the big round number there at 76 even. Okay, so we had 76 even, big round number right above us. So we expected that to be some sort of hold up there. So we made it higher risk. Called live in the room, of course, higher risk. At 11 minutes past the hour, 11 o'clock, we got short here. Fill was at 95. We saw tons of sellers come on. Momentum to the downside. It was difficult to avoid that trade. We saw so many sellers jump in, big, large sellers. We took 4 and then moved our stop down to our entry point +1. Got stopped out at that +1. So, of course, that's 8 + 2 is 10. $100 there on that first higher risk trade. Now, the second trade we took, though, that was, of course, the re-entry. This one called live again as a low-risk trade because this one, of course, was away from that big round number. At 11:15 now, a couple minutes later, we, of course, made another swing low. 89 was our swing low here. We broke below the 89, coming back down. 87 was the fill. We took 4, 8, and 8, another 24 ticks, $240. So total up here, there's 34 ticks right there within a matter of 5 minutes. We had put about 50 ticks in our pocket earlier and then took that small stop. So as you guys can see here, we quickly added up all the profits. 73 ticks in the day, guys. Trading with the trend, against the trend, guys. Doesn't matter where the markets are going. As long as we see green pace of a tape, some good volume, we will be trading every single day like clockwork. And guys, come out and join us tomorrow morning on Wednesday morning, and we'll show you guys how we take these trades. We'll show it to you live in real time, plenty of time with questions and answers. We'll give you a free 3 weeks. Come out and join us as part of our trial. Grab a copy of the beginner's course on the way in, and please rate and comment on this video. My name is Joseph James. For more information about lifetime membership, that's right, no monthly fees, lifetime membership at sales@schooloftrade.com. We open the room tomorrow morning, 7:45 a.m. Eastern Time, guys. 73 ticks today, 63 ticks yesterday, guys. How many ticks we can make tomorrow? You guys have to wait and find out. We'll see you guys tomorrow morning, 7:45 a.m. Don't miss a tick. Bye-bye for now.